Saturday, April 4, 2026, Weekly Recap. 6 straight losing weeks. A $14 swing in oil prices. Trump's war-ending signals followed by a complete backtrack. Q2 started with optimism and ended with confusion. Here's everything that mattered this week. 6th straight losing week for the S&P 500. The index closed at 6,575.32, up just 0.3% for the week, but down 2.9% from the prior week. The Dow managed a small gain of 0.5%, while the Nasdaq fell 0.2%. Oil, meanwhile, was the star performer, surging 14% for the week despite wild intraday swings. The week was defined by geopolitical whiplash and the markets struggled to find a narrative. Day-by-day breakdown. Monday, March 30th, how this escalate, oil spikes. The week started with escalation. The how this fired missiles at Red Sea shipping, prompting Trump to comment, finish it. Oil spiked past $112, the highest level since the war began. Futures were green, but the tone was risk-off. Traders were pricing in a scenario where the war continues indefinitely and oil stays elevated. Market tone, risk-off, but equities held up. Tuesday, March 31st, de-escalation signals, NFP looms. Tuesday brought a dramatic reversal. Iran signaled willingness to negotiate. Trump's tone softened. Oil retreated to $109. The market celebrated de-escalation. Non-farm payrolls data was released, better than expected, and month-end, quarter-end positioning supported equities. This was the week's best day for risk assets. Market tone, risk on, de-escalation optimism. Wednesday, April 1st, Q2 starts, oil crashes. Wednesday was the inflection point. Q2 began with fresh positioning. Trump signaled the war could end soon. Oil crashed below $100 for the first time since the conflict began, trading at $98.50. Retail sales and ISM manufacturing PMI data came in mixed. The market was repricing from war risk to normalization. This was the week's turning point. Market tone, bullish, war-ending optimism. Thursday, April 2nd, Trump backtracks, oil spikes. Thursday was the reversal. Trump addressed the nation and offered no clear timeline to end the war. Instead, he said the US would continue to monitor the situation. The market interpreted this as a sign that the war could continue indefinitely. Oil spiked 8% to $107. Equities sold off sharply. Trump's credibility was questioned. The de-escalation narrative collapsed. Market tone, risk-off, war uncertainty returns. Friday, April 3rd, Good Friday, markets closed. Friday was Good Friday. US equity markets were closed in observance. International markets traded, but the US was quiet. This gave investors a rare pause to reflect on the week and the quarter. Oil remained elevated at $107. Market tone, pause, reflection. The big picture, geopolitical whiplash. This week was defined by one thing, geopolitical whiplash. The market went from war escalation, Monday, to de-escalation, Tuesday, to war-ending optimism, Wednesday, to war uncertainty, Thursday, all in 4 days. Key themes. 1. Trump's credibility is questioned. Trump signaled the war was ending on Wednesday. By Thursday, he was saying it could continue indefinitely. Traders lost confidence in his statements. This is a major shift. For months, Trump's comments have been the primary driver of oil and equity prices. If traders stop believing him, the market dynamics change. 2. Oil is the primary driver. Oil moved 14% this week. Every 1% move in oil had outsized impact on equities. At $107, oil is back to levels that pressure inflation and equities. The market is now pricing in a scenario where oil stays elevated for months. 3. The April 6 deadline is critical. Trump's pause on Iranian energy strikes expires April 6. If Trump doesn't announce a ceasefire by then, the market could sell off sharply. If he does, expect a relief rally. This is a key date to watch. 4. Q2 started with hope, ended with confusion. Wednesday's de-escalation signals gave the market hope that Q2 could be a fresh start. By Thursday, that hope was gone. The market is now bracing for prolonged conflict and elevated oil prices. What to watch next week? Monday, April 7th, Easter Monday. Markets reopen after the holiday. Watch for any Trump comments on the war or oil prices. Watch for any Iran statements. The tone will be set early. Consumer Price Index, CPI, the most important economic data next week. If inflation is accelerating due to high oil prices, expect selling. If inflation is stable, expect a bounce. April 6 deadline, Trump's pause expires. If there's no announcement by then, expect volatility. Oil prices, the primary driver. Watch for any break above $110 or below $100. The bottom line, This week was a microcosm of the broader market challenge. Geopolitical risk is the primary driver of volatility, and the market is struggling to price it. Trump's mixed signals, oil's wild swings, and the April 6 deadline all create uncertainty. 6 straight losing weeks. Oil up 14%, equities down 2.9%. The narrative is clear: the market is repricing from de-escalation optimism to war uncertainty. The key question for next week: will Trump clarify his position, or will he continue to be ambiguous? The answer will determine whether equities rally or sell off. For now, the tone is cautious. The war is back, oil is elevated, and the April 6 deadline is the next critical catalyst. Have a good weekend. You're going to need the rest. Thank you. That is the weekly roundup for Saturday, April 4, 2026. Goodbye.